May 26, 2016. If you want to follow us on Twitter, please go to CATEX TV. The Egyptian airplane crash that occurred last week, Flight 804, on its way from Paris to Cairo, could cost the Egyptian economy about $5 billion in lost tourism receipts. In a research note titled "Egypt's Tourism Sector Stales into the Abyss," the research firm Capital Economics noted that expected losses are equivalent to about 1.8% of Egypt's gross national product. The tourism industry in Egypt has already been reeling from a series of blows, which has seen a sharp decrease in the arrival of the number of tourists. The month of April saw tourist arrivals down by more than 50% compared to the same period a year earlier. Problems such as the Arab Spring in 2011, as well as the loss of the Russian Metrojet flight from Sharm el-Sheikh last November, have given tourists concerns. The latest estimate sparks a significant deterioration in the outlook. Thousands of dock workers in the port of Le Havre in France poured into a public square earlier today, setting off smoke bombs as part of an escalating coordinated national protest against the French government's pushing of a labor bill that would loosen protections for French workers. Today in France, activists disrupted fuel supplies, trains, nuclear plants, and docks during demonstrations around the country. For the first time, the French government opened the door to possible changes in the bill, but said that they would not abandon it. The bill makes modifications to the country's 35-hour work week, which the French government says are essential in order to lower the 10% unemployment rate. Meanwhile, in Oklahoma City, at a public hearing yesterday, the Insurance Commissioner of Oklahoma, John Doak, said that 4 earthquake insurance companies have 55% of the total earthquake insurance market in the state of Oklahoma. It's a little bit unusual, actually, because there are 119 companies writing earthquake policies in Oklahoma, and the pure direct loss ratio for all earthquake carriers over the 5-year period from 2010 to 2015 is only 3%. So that means that the companies that are writing it are making an awful lot of money. PartnerRe, which was purchased by the Agnelli family through their investment vehicle ExxonMobil, has reshifted its investment portfolio by exiting junk bonds and moving money into property. They have a $16.3 billion investment portfolio. According to ExxonMobil, we're moving holdings into areas, quote, that we know and understand very well. The insurer exited about $179 million of emerging market fixed income holdings earlier this year, in addition to dropping $354 million of high-yield bonds in the last quarter of last year. There was a big explosion at a chemical factory near Mumbai, India earlier today. It caused windows being broken from the force of the explosion some mile and a half away. The blast was at a factory owned by the Akira Chemicals Group, and it was in the city of Damba Valley. 3 people were killed, some 50 workers were injured, 4 seriously. The fire is still raging in the factory, according to reports. Yesterday, shareholders at ExxonMobil and Chevron obtained a significant number of votes in support of resolutions that will call on the companies to offer their plan for how to operate a company in the event of a significant reduction in the sale of fossil fuels due to global warming concerns. Resolutions like this have been voted on in the past at annual meetings, but they're typically not even hardly discussed. The ExxonMobil vote saw about 38% of shareholders supporting it. At Chevron, some 41% of shareholders supported it. Supporters of the resolution, such as the California Public Employees Retirement System Fund, which has $1 billion worth of Exxon shares and $600 million in Chevron stock, said that this was a seminal event and will eventually lead to forcing oil companies to lay out their business plans for life in a non-fossil fuel economy. That will be very interesting reading. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.